Welcome to Real Estate 360 with real estate expert Kenn Renner. Kenn, happy holidays.
Happy holidays, Merry Christmas, Happy New Year's. It's the day after Christmas, and we're heading to 2024.
And I know that you've got some projections for 2024 that look pretty good. But before we get into that, you've got some events that you're planning. You'd like to invite some people out.
Yeah, absolutely. Yeah. So, I do live in Santa Rita Ranch, the #1 selling community in the Austin area up in Liberty Hill. And so I always like to get involved and do things for the community, with the community. And so we've got our 2024 Expo. Last year was the first year we did 2023 Expo in January. And I got together 40 businesses that serve the community. And we all had tables in the ranch house and had a great time. We had lots of networking, lots of energy going on, had over 250 of the residents through.
Nice.
So we're doing it again. And so we've got a lot of great people represented. We've got insurance companies, restaurants, pool builders, anything having to do with housing, roofing, audio systems, even teachers. We've got tutors. We've got anybody serving the community, financial advisors, CPAs. So we've got professionals, of course, me in real estate. So we're really excited to bring it back for 2024. And so we're pretty much already sold out of tables. Might have a few more left for those that want to try to get in. Mm-hmm. But it was a really fun event. And a lot of people are doing business with each other that were even the vendors that were there are doing a lot of business with each other.
Did you mention the date of this?
Yes, it's January 27th.
Okay.
Saturday. It's 11 a.m. to 3 p.m. We're going to have a couple food trucks. Baller Street Pizza food truck is amazing pizza. We just can't get enough of Baller Street. So we're glad to have them back. And then here's our directory from last year. We had I like to put together and promote the other businesses in the community. And get neighborly and get people to know their local vendors. And so I also like my newspaper, Home on the Ranch, that came out this week. We're talking about the schools specifically. Mm-hmm. There's brand new schools coming into Santa Rita Ranch. There's actually a high school that's on site that is opening up next year, plus a couple elementaries and then a new Liberty Hill ISD high school coming in 2026.
Wow. So
on the paper I talk about that, and my paper goes to the whole community. We also feature specific listings. We have my beautiful home here at 128 Rosebush on the north side. This is our featured listing. It'll be featured at the Expo, and it's $519,000. It's just about 2,380 square foot. It's a beautiful house. It's a Highland-built house. What I like about this is that the owners will sell it with the furniture involved.
Oh,
so people can buy the furniture as well. So you can actually do a midterm rental or just lease it out as a second. You have a second home. It's already done. The home is absolutely beautiful. So. That's my little pitch for 128 Rosebush in Liberty Hill. And then I always like to, this time of year, to give gifts, right? And so here's my calendar, Sandy. All right,
calendar.
Sun, sand, and surf. This is yours.
Oh, thank you.
Keep track of
Thank
2024.
You very much. Thank you.
Everybody I meet gets one of those.
I love it. Sun, sand, and surf.
Yeah, it's fun stuff. So,
nice.
We're looking forward to doing some vacationing in 2024 because 2023 was a pretty tentative year.
Yeah,
it was tenuous. I mean, the rates just went from in January, they were at like 5.75, and then by October they were at 7.75.
Right.
And during that climb, the first half of the year was great because the rates were low, and people had the pent up demand from previous year. Mm-hmm. They just kind of same thing happened the year before, is that everything went dead in August, September, October, November, and all of a sudden. So I'm predicting right now when the news comes out, like we see that the interest rates are dropping. When it hits CNBC and it hits the news channels, that's going to get people off the fence.
Sure.
And say it's okay to go buy real estate. And the same thing's happening with our investors. Okay, so let's get into stats. Sandy, I know we're here in December, late December, but in the stats are always a month behind, as you know. So we're looking at November's stats from the current median price for Austin Round Rock MSA is $425,000. 424, 450, down 8% from previous year. But I think also that has a lot to do with there's a lot more of the affordable housing coming back into the market, which is kind of bringing the stat numbers down. The closed sales was pretty much flat from the previous year, just over 2,000. Average days on the market 75 days, so you've got to be patient when you're selling right now. And 3.7 months supply of inventory, so that's up a little bit from last year. So, but I'm going to tell you right now, we're seeing a lot more traffic with our listings. I think people are once we go into the new year, the first quarter is going to be robust. And not only that, the builders are already raising their prices. They're already pulling back on incentives. They've already sending emails out saying, by the way, get your clients in now because prices they're going to raise them. Mm-hmm. And so we're hopefully they'll keep the NFC financing, the the lower interest rate financing, the subsidized financing to, even if we get into our, the mid fives, maybe they'll continue to subsidize down into the maybe 4.5%, 3.75% range. I don't know. They don't really need to because I think their margins are getting better. So I don't think they need to keep throwing more money at the financing. But even at that, currently right now we're looking at 5.99 on 30-year fixed, 6.04 is the APR. So on primary, we hadn't seen below 6 since February of last year.
Right, nearly a year.
Yeah. And then it went all the way, as the chart shows, went all the way to 7.75%. Back in, that was October 26 is when it peaked. And believe it or not, since then, we've dropped down to 5.99%. So we've dropped almost almost 3 points, or 2.5 points.
That's a great start.
Yeah, heading the right direction. So we're excited about that. That's going to really feed the market to get people off the the fence and get back into the game. That's okay to buy houses, and that we obviously have not seeing any, not much reduction in prices right now. We're seeing people being able, the builders and resellers being able to raise their prices.
I'm always curious about the buyer that sits there and goes, yeah, that's a good drop, but I'm going to wait some more.
Oh yeah, of course.
Because there's always that person that, they're going to wait till it's 0% financing. You know what I mean? It doesn't make a lot of sense.
Well, no one can time the bottom, and no one can time the top. It's just a matter of just dollar cost averaging. I say that with my investor clients. Like we were selling homes down, sold some homes down in New Braunfels, and in summertime, this gentleman bought a home for $242, Drexel Plan 1626, nice 1-story 4-bedroom. Well, during the fiscal closeout, we were able to get another one at like $221, the same floor plan. He's like, well, Ken, I just paid $442. I said, well, it's like dollar cost averaging. You bought one at $220 and one at $240. It averaged out to $230. The numbers still work. Yeah. So I'm really bullish. Actually, more bullish now because of what the interest rates are. And when it hits the news, that's when everybody goes, okay, it's good to go buy houses again.
I have to tell you, as a mortgage loan officer, that's good news to hear.
Yeah. I know.
It's really good.
I really do feel for my industry because we've had 60,000 people, 60,000 realtors exit the industry this year, probably more. That was a stat from a few months ago. I really also, on my next podcast, we're going to be talking about how to help my industry help realtors get an exit strategy, a retirement plan, to use the advantages of what real estate is, the insider knowledge and the tax benefits. We'll talk about that on the next one because I think it's really, really important. So on this Fortune article, it says right here, mortgage rates could drop below 5% next year if inflation continues on its current path. I mean, you talk to any of the experts on up and down from the Shark Tank people all the way down to, our local mortgage brokers. If we drop into the 5s or below 5s, we're going to have huge price increases. We're going to have a feeding frenzy, multiple offers. Now, I don't know if that's all that healthy for the market, but it's going to happen. So what do you have to do? Lock your price in, lock your interest rate in now, especially if you can get that low builder financing, and buy it and be happy with what you get because the prices will go up. I get this all the time. People go, well, do you think they'll come down a little bit more? And I said, we've already seen 2 price increases last week, so, and so then they always want the old price, right? So like you said, try to hit the zero. So, not only are I cut my teeth many years ago as first-time home buyers, back in the 90s when I first moved here in 93, we started helping first-timers because no one was helping them out. So I did a whole course and seminars and stuff on how to buy your first home. And in that course of helping hundreds of home buyers buy these homes, I'm like, these would be really good investment properties, right? Same house, right? 3-bedroom, 2-bath, 1,500, 1,700 square foot. And so That's what we got. That's what got me into selling hundreds of investment homes, basically affordable housing. And so I have this chart of buying versus renting in America, and this goes back 50 years. And so the red line on there is your rent, the cost to rent, and the blue line is the cost to buy. And so pretty much it's always been, between the 70s to the housing bubble of 2006, it was always a little more expensive to buy than it was to rent. Rent, you can see, is on the red line, is very static. I mean, it's very stable increase in rents over the years. But since the bubble all the way to 2020, we had it was cheaper to own than it was to rent. Mm-hmm. Okay, but in the last 2 years, we've gone up to the point where this typical home, just like we would have in San Antonio, that would, if you rented it from us at $1,845, the cost to buy it right now would be $2,697. So actually having over it's over almost $1,000 more a month to own the house that you could rent from us. So we're seeing that's what we're doing about is helping with the affordability. Is like people, even if they could buy, would they really want to pay an extra $1,000 a month rent? So I got a little bit more dialed in on the second chart of showing how that actually played out from 2006 through 2020, where we're at 23, where we're at now. So that's one of the reasons why we're still super bullish on getting our properties, getting investors to continue to buy properties, because we are still very short. I mean, National Association of Realtors say we're between 3.5 and 4.5 million units, single family homes, short from being able to meet the population and demand of housing coming up. So that's the reason why we're not going to see any big price crashes. Mm-hmm. That's over. That's old news. Our real estate recession's already passed. And because we just don't have enough housing, and it's a matter of just simple supply and demand. Fifth grader could know. Right. So we're looking at we are very bullish on the Austin-San Antonio Megaplex. This is an article that just came out just a couple days ago. With San Antonio warms up to national attention. We're starting to get. People are starting to look at it. Major projects, changing economy. And the byline's good. Lone Star State's second largest city emerges as affordable market with population influx. So 20% of the people that moved into San Antonio Metro last year came from Austin.
Oh, really?
Yeah, okay. Because our prices are, if you look at the next slide, the prices are double. Mm-hmm. And so people can move 50 miles or even in between and get homes that are, we're selling homes at $225. I got one right now for $219. Beautiful 1,500 square foot house, brand new construction. So you'd have to maybe drive a little bit. But that actually region between San Antonio, San Marcos, New Braunfels, and the outside suburbs of San Antonio are just absolutely blowing up right now. Yeah. And it's really exciting to see, and it's exciting to see our investors doing well. If you want to know more about that, I have about our Central Texas super region. I have a whole webinar on it. It's Austin Investment Webinar .com, and there's great resources on there, including my masterclass that I did back a couple of years ago, which has helped literally hundreds of clients be able to buy their investment and their primary residence. So we had a good year this year. We were just under 20 million in sales, about 56 closings. So that was really good compared to what's happening in the industry. There's stats are that in Austin, 38% of realtors have not sold any houses this year. Yeah. 49% have either sold none or just one. Yeah. So we're feeling very blessed that we were able to help, and because we do work such a broad area, but we also love to serve our local community right here in North Austin, Liberty Hill area. One of the things that we're doing for our clients, because we are selling so many investment properties, we are augmenting the marketing to get tenants in it. The number one thing that people don't want is a vacancy.
Sure.
And this time of year is tough. And so we tell our clients, this is the holidays, it's definitely going to pick up right after the first of the year into the springtime, but put your best foot forward for pricing, for flexibility on lease terms. We want to get people in there because 1 month vacancy could cost you, if you took the 1 month vacancy at $1,800 lost in vacancy rent, you could have lowered your rent $160 a month and still had the same amount of rent at the end of the year net, right? So my encouragement is to offer the perks to get the tenants in there, but we don't stop there. This is a mailing piece that we sent out to 2,000 apartment complex units. High-end apartments right by the hospital in New Braunfels. And so what we're doing is we're driving people to the community. We have open houses every weekend so that we can help make sure that we get enough traffic and get people in there. Because a lot of times the leasing agents and the property managers don't have the resources. This costs a couple grand to send a mailer out. They just don't have enough money. But we do, because we found that if we get them leased, when we get them leased right away with a good tenant, then our clients come back and they tell two friends and tell two friends. We have a lot of multiple buyers that are, we have some clients right now that are living in 3 different states and they're all buying here in the same area. So as partners. So I'm looking forward to helping with the clients. Check out the Austin Investment webinar. It's a video podcast similar to this, and I think we're gonna find it's gonna be a really, really good 2024.
Remind everybody else about the expo again.
Oh yeah, January 27th at the Ranch House in Santa Rita Ranch. That's going to be from 11 to 3. And we're going to have, like I said, about 35, 40 local businesses and hopefully a few hundred people through. Hopefully the weather will cooperate with us.
Good stuff. Always good seeing you,
All right.
Ken. Happy New Year.
Thank you. Happy New Year. See you in 2024.